And people always want to know what our next product is. But this is not the time to. We obviously need to have a proper dedicated product launch.
Ever wondered what goes into shaping the future of electric vehicles? Join us on this deep dive into Tesla's latest move as the electric vehicle giant sets its sights on a whopping $10 billion capital spending spree in 2024. From the evolution of the Model 3 and Model Y to the anticipation of Tesla's next-generation vehicles, we unravel the layers of growth, challenges, and strategic investments that define Tesla's dynamic journey. Tesla, a trailblazer in the electric vehicle industry, finds itself at a crossroads between two significant growth waves. The initial surge witnessed the rapid production ramp-up of the Model 3 and Model Y, marking a transformative era for the company. However, this wave seems to have reached a plateau, paving the way for Tesla's declaration of a second growth wave set to roll in late 2025 with the introduction of next-generation vehicles. In a recent SEC filing, Tesla unveiled its capital expenditures for the year 2023, revealing a groundbreaking $8.9 billion spent, a new record for the company. The filing emphasized sustained growth and Tesla's ability to self-fund its business, laying the foundation for an exciting yet challenging phase of expansion. This surge in spending sparks curiosity about where Tesla plans to allocate this capital and how it positions itself for future success. Brace yourselves for Tesla's bold move as it announces plans to surpass its 2023 spending record. With a projected capital expenditure exceeding $10 billion in 2024, Tesla seems poised to invest heavily in various projects, research and development, and infrastructure growth. The disclosure also hints at a consistent commitment to substantial capital spending in the subsequent fiscal years, between $8 to $10.00 billion. While the SEC filing doesn't delve into specifics about where the $10 billion will be directed, Tesla's historical focus on manufacturing operations provides some clues. Gigafactory Texas and Berlin are ongoing projects that continue to absorb significant investments as they contribute to Tesla's global production network. The question lingers: could Gigafactory Mexico be the next frontier for Tesla's capital allocation, or does the company have other surprises up its sleeve? One intriguing possibility driving Tesla's augmented spending is the expansion of its supercharger network, an integral component of the electric vehicle infrastructure. With Tesla's commitment to rapidly growing the supercharger network, the company is entering a capital-intensive domain. Building and installing charging stations incurs immediate costs, while the returns unfold over years, possibly decades, aligning with Tesla's vision for the future of EV charging infrastructure. Tesla's strategic decisions are reshaping the landscape of electric vehicles, and the $10 billion capital spending plan is a testament to the company's ambition. As we look ahead to the evolution of Tesla's manufacturing capabilities, potential global expansions, and the supercharger network, the road ahead is paved with both challenges and innovation. Join us in decoding Tesla's billion-dollar bet and share your thoughts in the comments below. What do you think about Tesla's aggressive capital spending plans? What could be the key focus areas for the company in 2024 and beyond? Don't forget to like, share, and subscribe for more updates on the ever-evolving world of electric vehicles.